Okay, I want to just run through how a market can react to a level. I recently wrote a post on the NetPicks blog, the pitfalls of fading market levels. And this is something that people don't really take into account when trading against the direction of the market at a level. So let's really quickly run through the examples. So the three basic types that I go over here are a market can reject a level and reverse from it, which is obviously what a fader hopes. A market can break straight through pretty much a level, and the market can trade around the level. This is something that people often don't really recognize, and basically it can go back and forth through the level, and often what you'll find is that if it's a really important level, a key level, you'll find that there's a decision that needs to be made by the market, and it needs to resolve itself before going in either higher or lower. So let's go through the example here that I have already up. This is in the Euro futures, June 15. We've got a level here, swing level, from the 107.24. So I've just drawn a horizontal line here to denote that, and this is on the 500 volume chart. So the 500 volume chart's here so that we can see what the detail is, the granular detail, how the market's reacting around the level. So as it comes to the level here, what we can see is there's some reaction as it in fact gets fairly close to it. So 107.24, 107.26, it's actually moved away from this. And a really, really important point before we go any further is what I'm looking for if I think that the market's going to reject a level. What I want to look for is, and I'll just show you on a trend channel, this is only really just to demonstrate what I'm looking for rather than being a strong channel that I'm actually looking for to hold or break from, but I'm just drawing to demonstrate roughly what the behavior is. So this leg lower is defined broadly by this channel here. Probably more importantly, you want to see it consistently making lower lows and not pulling back more than its maximum, roughly more than its maximum amount that it's already done. So you tend to find that it does this fairly early on. You can see here 107.67 pulled back to 107.83, so 16 pips or ticks, and then here we've done 49 to 66, so 17 there, so it's just a tick more. So at this point, I don't really want it to go more than about 19.20 against the back from the low, because then it kind of makes me think, well, this is quite a strong move against the direction. So as we approach this 107.24, we get a pullback from 26, but and it goes 11 ticks back. It then goes through a few ticks. It goes to 107.21, and then it pulls back, and it actually goes through by quite a bit. So this is where what I was saying about the channel not being particularly useful from a technical standpoint. Just it's an illustrative channel here. This is what I'm looking for. So if we then make a low anyway, I'd redraw it. If it stayed like this and we started making high, so it pulled back, made a higher low, and then it broke through 107.37 by more than a tick or two. So if it went to 39.40, then I'd probably just leave it on as it is. But as it stands, what we saw here is it didn't get through. So it's gone to 107.21, 107.37, that's 16 ticks. So that's within the realms of the leg lower, and it's made a new low by more than a tick already. So 107.21, it's gone to 107.19. So at this point, you can see that although there's been a bit of a reversal from that level, it's not gone far. It's not gone far at all. And this is why there's an argument for using money management and taking a little bit of your position off very quickly, because it covers the position in order to just cover your round trips and your stop, hopefully, or more than you would otherwise get. So you frequently see this a small rotation away from an important level, as people do naturally try and get it in at that location. So you can see that the markets then pulled away from this downtrend movement. You see we made a low here, then a high low, and we've started to break away from that quite cleanly on a 60-minute chart. Quite a strong move there. And we've moving back towards this 107.24 again, same level, testing it from below. So what happens in this case is, and we should just bear in mind that this is quite a long-term chart. 60-minute is quite a decent chart in terms of the amount of movement you get on it. So you've got to consider that maybe 1 or 2 ticks or 1 or 2 pips is very, very tight. So a test might be a little bit more than that. Ideally, you'd want it within 3 to 5 ticks, pips, but you don't really want it. It doesn't have to be quite so close. So what happens in this case is it doesn't quite get that far. It gets to 107.17, and I'd still be expecting maybe a test at this point of 107.24 or closer, maybe 107.20. But in this case, it doesn't do that. So it gets to pulls back, and then it gets to 107.14. So then it breaks away from that, pulls back much more deeply, gets to 106.89, and then it gets back to 107.10. And this is a decent second swing. So there's some separation between the swings, whereas there's not a lot here. So this is a proper double check of this area, in my opinion. So at this point, I'm quite happy to say that it's retested higher. So when it starts moving back lower, I've got to think, okay, well, what's the channel that I'm looking for? Really, it's much more difficult here. I mean, you can see that there's a balance that was created a little bit higher here, but there's not a channel as such. So for that reason, I'd be looking for a test of the last swing low. In fact, really the last swing low here was right here at 106.64. So that's what I'd be looking for in this case. We can see it starts to get into this trend channel type behavior again. Pullback here is 89 to 10, so 21 ticks here. And first of all, it gets to 106.63. Now, in this case, you'd think, okay, that's bad news for shorts. If you were shorting the market, you would not want to see a 1 tick fail of the 106.64. So at this point, you don't want to see it more than 23 or so ticks higher. So you don't want to see it above like maybe 86, something like that. 85, 86, that would be bad news, and certainly above this last clear swing high at 94 would be, shorts would be completely toast, in my opinion. So let's have a look. So we've got from 63, we've got to 82 so far, 19 ticks there, at 83, 20 ticks. Then we've made a lower low, and it looks like we're clear at this point. So can see in this case we have clearly rejected that area, maybe not to the tick, but pretty well. So the final option for how the market can react to a level, I just want to go through quickly, is that it can trade around a level. Now, this is probably the least clear-cut example here, but it's the same level, so I thought that it would be a good level to discuss. Often what you find is it will really hug that level. In this case, it's fairly close, but maybe not quite as clear. It's still valid, though. And what we can see is that the market's gone through, failed to hold above it for very long, this 107.24 again, and then broken down. You can actually see maybe a mini head and shoulders within the short-term chart playing out. So it's come right down, back towards previous traded areas on the low end of the last swing, and it started moving back towards it. It's moving back pretty strongly again towards 107.24. So it's got there, it's pulled back just a few ticks this time. So 107.24 is pulled back to 17. We tested 25, and then it's gone through. So the high here was 107.57. So it did initially get close at 107.53. It pulled back right to that level again, bounced a bit, made a lower high, higher low, pushed through a bit, back around that level again. So it's kind of controlled by this area. So it's back and forth through that area. There's no strong decision to go higher or lower. And then finally it breaks through. So those are the three levels. Remember that three ways of reacting to a level. Just remember that however it does react to a level, you've got to constantly be adapting your expectations based on what does happen. And if you're fading the market, just make sure that you manage your position properly and you don't just stand in the way of a market blindly. You're looking for how the market reacts to the level and then how it subsequently behaves after testing it. Okay, thanks for watching and see you next time.